Today, in episode 9 of the Kyle Talks Money podcast, we're going to talk about what no student loan payments until 2021 means for you. So hit that like and follow me on YouTube and Instagram for more personal finance guidance and wisdom from all over the web. You don't have to make another federal student loan payment in 2020. Now is the time, though, to decide what to do before your bill arrives in January 2021. Federal student loan borrowers were already in an automatic interest-free pause on payments as part of the original coronavirus relief bill, known as the CARES Act. This pause was expected to expire September 30, but an extension of the forbearance through December 31 was directed in a memo signed by President Trump on August 8. The forbearance extension is to begin October 1 and run through the end of the year, barring any legal challenge. Here's what the student loan payment relief extension is likely to mean for you, depending on your situation. You have federal student loans and face financial hardship. Although January 2021 is just a few months away, it's enough time to make a change to your federal loan payments and avoid defaulting on the loans. There is no harm or downside in talking to your servicer now, says Scott Buchanan, Executive Director of the Student Loan Servicing Alliance, the trade association of student loan servicers. You want to be well prepared for whenever this does expire. If you know you'll have difficulty repaying the debt, contact your servicer now about enrolling in an income-driven repayment or IDR plan. It caps payments at a portion of your income and extends the repayment term. If you don't have a job, your payment could be zero. If you're already enrolled in IDR, make sure to recertify your income if it has changed. You can still make payments on your federal loans. If your finances haven't been affected by the economic downturn, you can use this time to prioritize financial goals. Consider making payments to lower your overall debt, depending on your original repayment strategy. Your payments will be applied to any interest accrued first before your principal, but any payment will help you reduce the total amounts you'll pay over the life of the loan. Since your loans are on automatic forbearance, you'll need to contact the servicer to do so. You can also make a dent in other financial goals, such as paying down credit card debt or padding your emergency funds. Your federal student loans are in default. All collection activities on federal student loans are suspended through December 31, such as wage garnishments and collection calls as part of the CARES Act and the memo extending relief, according to the Department of Education. How about if your federal student loans are in loan rehabilitation? If you're currently rehabilitating defaulted student loans, the original 6 months of non-payment counted towards the 9 needed to complete the process. But the memo doesn't specify this would continue under the forbearance extension. Contact your servicer for more information. How about if you're pursuing public service loan forgiveness? Federal student loan borrowers pursuing public service loan forgiveness don't need to make payments until January 1st. The original 6 months of non-payment and 3 months of extended payments will still count towards the 120 payments needed to qualify for PSLF, as long as you're still working full-time for an eligible employer. What if you recently graduated from college? If you were expecting to start making payments on your loan within the period of extended forbearance, your first payment won't be due until January. Usually, interest occurs during a grace period, but if your 6-month grace period overlaps with the administrative forbearance period, interest won't grow. Use this time to find out who your servicer is and what your first bill will look like. If you think you can't make your minimum payment come January, you can apply for an income-driven repayment plan to cap payments at a portion of your income. It could be zero if you don't have a job, remember. Apply for income-driven repayment at least 2 months before repayments start. What if you're taking time off school? Federal loans typically have a grace period of 6 months after you leave school. If you have student loans and last attended school in the spring, your payments could start to come due this fall. The extended forbearance period would delay your first payment until January. When you resume classes, you can defer payments until you finish school as long as you are enrolled at least half-time. But student loans get only one grace period. You won't have another after you graduate or leave school again. What if you have private student loans? Your lender may offer private student loan relief in the form of a payment pause or reduced payments. While a number of lenders structured relief plans to end September 30, many are open to an extension or additional relief. Contact your lender to ask about additional deferments or payment reduction. You can also apply for existing loan modification programs for financial hardships. These will vary from lender to lender, but interest will continue to occur, unlike federal loans. You'll likely have to apply for private loan relief individually since most lenders aren't making payment pauses or loan modifications automatically. Now, what if you have non-government owned FFEL or Perkins loans? Student loan borrowers with a Federal Family Education Loan (FFEL) program or Federal Perkins loans not owned by the Education Department don't have access to the automatic forbearance. To take advantage of the forbearance, you'll need to continue your loans into the Federal Direct Consolidation Loan. Consolidating loans will cause any unpaid interest to capitalize or be added to the principal balance. Contact your loan servicer to determine how consolidation will affect the total repayment amount, interest rate, and loan balance. This episode has been brought to you by Smart Money Parenting. I created Smart Money Parenting as a way to teach parents how to educate their kids about money. By starting at an early age using incentives, habits, and money, your kids will grow up to become financially literate adults. We learn almost everything in school, but the one thing most people don't learn is simple budgeting, saving, and even investing. We're brought into a world that revolves around money, yet our kids lack the knowledge and preparation to take on that world. Let's change that. Smart Money Parenting is a course, but also an investment in your kids' future. There are details to the course in the description along with a 20% off discounts code you can use when enrolling. Give your kids the future they deserve.